Oh, okay.
I gave the address. We get here, call me.
Oh, okay, that's fine.
How you been though, Dave?
Good, good. All right, checking the audio here.
Yeah, see.
I was telling Stella, you guys don't want to come in the office anymore.
No, I actually missed it.
You miss it?
I have, I got sleep apnea, so
Oh, okay.
I fall asleep. I'm in here in the class.
Hey, Peter.
Hey, David.
Hello, hello. Guys, we'll get started shortly. Hey, Kim.
When I see them, I understand.
Hey, Taj, welcome.
So stunk it up.
Guys, we'll get started shortly here.
So I usually fly to Philly because Frontier tickets for like $38. So
Hey.
it's all about flying to Newark or Philly.
A train or a bus or something, you're right in New York.
I usually, if I go to Philly, I rent a car. If I go to New York, I take the bus.
Years ago, but yeah, you're in there.
You know, my dad lives in Lower East Side Manhattan.
Okay.
As soon as I cross the bridge, I'm at his house.
You're there.
Right now, and just I'll text it to you so you have it in writing. And why don't you just text me back to say yes?
I got a lot of friends in Philly too.
Yeah.
I'm very familiar with Philly.
Yeah.
All right, guys, let's go ahead and get started here.
No worries.
Let's see here.
Yes. Yes. No problem. Thank you. Bye-bye.
All right. All right, Kim, can you hear me okay?
Yeah.
You guys can hear me okay?
Is there a Wi-Fi code thing?
Yeah. Do the Winter Park. It's Creole Conference Room. Creole Conference Room. And the password is Winter Park Conference. Winter Park Conference. Hey, Danny, welcome.
I'm sorry.
Guys, we'll get started shortly.
I'm sorry, boss.
Creole.
Conference room?
Yeah, conference.
Just downstairs.
Creole, the regular.
How do you make it come out of your headphones?
Winter Park, one word, Winter Park.
No
Are you lying?
Winter Park Conference. Winter Park Conference.
Myself here. Hold on.
Winter Park Conference.
Oh, so it's not Winter Park Conference.
Yeah, let me make sure. Yeah, Winter Park Conference. You in? Okay. You in, Gary? No?
This computer is weird with Wi-Fi, man. I really gotta get another one. Let's see here. I just want to check on the Wi-Fi.
It's trying to connect. It's not connecting. If that doesn't work, try this one. It's done this. Yeah, keep trying. Hey guys, welcome, welcome. I've got a great treat. We've got Stella in the house. So Stella's here all the way from Philly. And she came in town for a conference and decided to stop in. So it's pretty cool. Pretty cool to have Stella here in the house. In the house. So welcome, welcome Stella, welcome. All right, guys. What we're gonna do today is I don't want to do much. All right. It's been a crazy week, right? Markets were up. I think the Dow finished up 800 points today. And that was not predictable. All right. So neither was yesterday. So it's been a crazy volatile week. All right. Let's take a look at, I want to take a look at the indexes here. Next week will be a critical week. The Dow was up, like I said, big time today. All right, we are watching some important levels. All right, so here is the Dow. It actually came back right to our support. So our previous support is right here on the Dow, and it actually closed right above it. Okay, so we'll wait to see what happens next week. All right, so we need the price to stay below this moving average, guys. All right, we need it to stay below this moving average right here. All right, we still can't buy. I mean, there is
David, you're showing the wrong screen. We only see a British pound.
British pound. Okay, hold on. All right, I see here. How about now? You guys see my cursor?
Much better.
Much better. Okay. Hey, Bill, welcome. All right, so I don't have any good news. Right now, we have no idea what price will do, right? So I can't even say that we're still in the markdown phase, guys, but if the buying, if they continue to move price higher, and we get above this area here, then we could start making new highs, okay? So we've got a white consolidating candle here on the IWM. So right here, okay, on the IWM, hopefully we hold this area here. So Peter, you should be watching this area right here. Right here is support, previous support. It's amazing what 2 days will do. Crazy. It's amazing what 2 days will do. This is yesterday's action right here, this candle here, and then here is today. All right, so we need the price to hold below this support line right here. If it gets above this line right here next week, right, this is now resistance, right? We could see the indexes move higher. All right. So that's IW, that's the Russell. Same thing with the NASDAQ. However, we don't have any consolidating candles. Okay, so it's still in the markdown phase. All right, we need some selling to come in next week. All right, if not, then we might have to change from short to long. Okay, but we'll see based on the price action. 1 second here. Any questions on this? Any questions on this?
I have a question for Ken. When you see this kind of sharp, straight up price, from your experience, like, what does that mean?
For me, what I did is, guys, I know the trend is down. I know that I'm playing with fire. And, but I got long, really big time yesterday, and I even left a whole bunch of contracts out there from the close of yesterday, as I talked about, until today. And it was call options, and I made money on the QQQs like we talked about before. Made a lot of money on those puts. What I did is I bought call options on the QQQs. I bought call options on the spiders, Palo Alto Networks, Mercado Libre, and I had another real big one. Who was it? Hang on.
So you're playing the longs that it's going back to the moving average.
No. All I'm doing is David will tell you this, and I'm sure he does it too with currency pairs. What you do is you start trading on a much smaller time frame, much smaller time frame, and yeah, like that, 30 minutes, okay, and you trade that, and you stay in it until the trend changes. Like right now, it's no need to change. But if we gap down on Monday, you know, you're on the wrong side of the trade. I have options that expire on Monday too, on the QQQs and also the spiders. If we gap down on Monday, I get my head chopped off. I know that I'm going to trade in just a very, very small time frame, and right now I'm doing okay. And but I know the trend is still down. If it's up, you can see it's a buy signal on the 30 minutes. But when he puts that back on a 4-hour chart, I should not be doing what I'm doing. So if you're gonna trade what do you call it, a counter trend bounce, meaning that you're going against what the trend is, but you're trading on a different time frame, that's okay. But the difference and advantage I have, Peter, that a lot of you guys don't have, I sit at home all day, every day, and half the time I barely take a bathroom break, and I'm sitting here watching it. So if there's any change or turn in price, then I know it. And I'm trading on a very, very, very small time frame. And that's it. That's the way that I trade.
Dave?
Huh?
So he's doing 30-minute time frame?
30 minutes. Kev, are you doing 30, 15, or 1 hour?
30 minutes. 30 minutes, but I have several screens, guys. I got 4 screens, and on one screen I probably got about 40 different items on it, so I'm looking at different time frames and knowing that this is not going to go straight back up to the all-time highs without taking a break. This is going to stop at some point. So what you have to be cognizant of is that at some point, you know, this thing is going to start going back down. So that's why I trade on the smaller time frames. So to answer your question, Peter, yes, I got long yesterday, first thing in the morning, and because I was trading on a very, very small time frame, and I did hold positions overnight, which I kept all the way until the very end of the day today. And I do have, and I had to sell them off because they expired today. But I did buy some more positions that expire on Monday. And all of those are long positions.
Got it. Yeah, I understand your trade. I seen this type of pattern before. I usually put price on a Fibonacci, and usually when you see this kind of pullback, it's going to Fibonacci 50% or 61.8, and they'll continue back the trend. So it's hard to trade this one. Like, you know, I'm short, and these couple days it hurts my stomach just watching this, and I have to step away. And
So yeah, let's go over.
I mean, if you look at QQQ, like every time it makes lower lows, and they'll snap back to Fibonacci 50% or 61.8, and then it'll continue back down. And you know, if you're at a profit, this is what we call like stop hunting. Like the seller wants to trick you into buying, and so they can sell into you. Usually you get back.
Yeah, even though it's a different situation, this is sort of what the market did back when the United States went into Iraq. The market started to rally for a few days because it had sold off really hard, just like this market had did.
That's exactly what I was asking you. Like in times of war,
See, you can't say that. You can't say that every single time because I have no idea what it's going to do the next time. What if Russia goes in and start taking over the Baltic states that used to be part of the USSR? What if they go, which are NATO nations like Estonia, Latvia, and Lithuania? I don't know what's going to happen. I have no idea. I'd say all bets are off.
right. It's usually risk off. Like, you know, it's volatile environment. Why would you get into equities when things are so crazy? So it just, these couple of days is very strange.
Yeah.
Okay, so what Kim is saying is this, all right? And you guys can do this. It's a bit tricky. You've got to be quick. And because Kim is at home, he can trade full time, so he can see these moves, okay? But you guys can do it too, all right? But what you've got to do is set up a smaller time frame, like a 30-minute time frame. You can do a 1 hour time frame. I wouldn't do a 15-minute. A 15-minute, you get a lot of noise. Okay, you get a lot of noise. So what he's saying is this: he knows the overall trend. Here's the Qs right here, the QQQ, right? So the overall trend is in the markdown phase, right? In the markdown phase. But this price action here, right? This price action here, you can trade that on a 30-minute time frame. All right. Now, next week, this price can come back down, right? It can come back down and continue the markdown phase. So he's got to be quick, right? So he's going to have to get in quick on the 30-minute and then get out quick if the selling comes in. Okay. So all he's doing is capturing. So Peter, all he's doing is he's capturing, and you guys can do that, but you need a smaller time frame, and then you need your foundational window. Okay, you can use the daily time frame or the 240. I think the 240 works really well, but you can use the daily time frame. So yes, you're gonna get in quick. Here is the 30-minute. Here is the buy signal, right, on the 30-minute. Right, but just know that your overall trend is down, so it's risky. Okay,
He's trading the pullback. He's
trading
the pullback, the reversal.
Exactly, that's all he's doing. And guess what? You can do that. Just know that when you do that, you're going against the overall trend. All right, so you could get slammed. So what Cam is doing, he has to get out quickly. He has to get in quickly. And that's what he said. He got in quickly, got out quickly. He's not holding for the overall move. All right. So he's basically scalping, but he's doing a counter trend trade. All right. So those are great opportunities. You have to be quick. Right? You have to know what you're doing, okay? But those are great opportunities because all he's doing, he's catching that move here. He could have caught that move here, caught that move here, but guess what? You got to be quick, because what happens is this, if you notice here, right? Price went up, right? You could have caught this move here long, but guess what? It came back down short.
Yeah.
Okay. So that's great trading, right? That's great trading. But you have to be careful. So this would have been his core position, right? His core position. And then all he's doing is trading around his core position. All right. Good job, Cam. Good job.
Thank you. Trend is still down though, guys. Keep that in mind. Don't forget about that. The trend is down.
David, can we look at gold? Because that was one of the recommendations for Sniper to go long.
Let's see here.
That was actually Gold Corp. GOLD is Gold Corp, not the physical gold.
Yeah, hold on 1 second. Let me put them in here.
I think the physical gold is
What market is that?
GS pound.
That's the NASDAQ.
That's the NASDAQ. It's,
Yeah.
So you can trade that like a Forex, like you.
No,
By lot sizes or like how does it work?
you trade options.
Oh, options.
Yeah.
GOLD.
Yeah, we treat it like options. Okay, Peter, so what's your question?
We're going long on this one for the for Monday.
Yes.
But looking at the 30, it looks like it's giving us a buy signal and a sell signal, and to get out.
Okay.
I think this is on a pullback. On a longer time frame, it looks like it's going long.
Okay. Now keep in mind, on Sniper, we don't care about the chart going in over the weekend. Okay, so the chart setup doesn't really matter. Now you can look at the perhaps the daily or the 240, but the 30 minutes, don't worry about that. And why do I say that? Why do I say that with Sniper?
Because it's more instant.
Yeah.
You do 240, that's like a 4 hour.
Yeah, but why am I saying that? That the price chart on Friday doesn't really matter, especially on the 30-minute.
Yeah, what you're looking for is unusual options activity in the on the whatever you're trading, whether it's a stock or exchange traded fund or whatever. But in this case, it's just Barrett Gold.
Yeah. So Peter, so what we're hoping, remember, this is Sniper, right? So we're anticipating some type of news or something, some event, right? That's gonna trigger gold on Monday. All right. So we don't that the buy-in that came out today, all right, that is for Monday. So what we're hoping is that on Monday, right, this right here will change completely. This chart right here will change completely on Monday.
In your text, I'm trying to understand, on the bottom of the ticker, you put in wire. Is that, and then call premium 568,000.
Yeah. So that's what they're.
The
Go
data
ahead.
that the institution
Yep.
are getting in.
Yep. Yeah. And that's the volume there. So that's a lot that they got in at the end of the close today. All right. So that volume that they got in will not change the price of today, but it will hopefully, we're hoping that on Monday it will, and we'll get a gap up. Okay. That helps.
And on Lucid on your screen, I got out today too, because when I gave that signal to
Okay.
get out.
To get out, good.
See that white? Is that what that white means? That white little circle with the arrow up? That means
Yes, to
cut
exit.
to cover.
Yes, yeah, yeah. Or
Oh,
buy to cover. Yeah.
So the white circles are exit signals.
Yes. So your blue arrow is your buy. Your red arrow is your
Sell
short.
to exit.
Yeah, no, your red is
No.
short.
It's short for your trend. It's the trend. Let me turn this down.
Yeah. So your red, your okay, so let's show it here. Okay, let me open this up. Okay, so your blue arrow is your buy to go long. Your white is your exit right here. And then your red is your sell short to take the price down. And then your white will be your buy to cover. So your white is always your exit. Okay, you got that, Peter?
Got it. Yeah, white to exit.
Yes. And within that, you've got these little triangles here. All right, so there's these little triangles right here, and then right here. All right. So this blue arrow here points to this candle. So this is the candle that our entry was on, but it was right here, right at this triangle here. All right, is where we got the buy signal. And then you guys will notice it's pretty precise. You guys will notice like here was our sell signal, this white arrow here. All right, you see that? It's white arrow here on this candle, but then it was right here, this triangle right here on this break of support, this line right here is where we got the sell signal, which is pretty cool. So it gave a sell signal right when the price broke support right here on this line, right here, right here.
So before, like, I didn't have a formal system I adhere strictly to. So I slap this on my overall all my positions. When it tells me to get out, I'll get out.
What's that, Peter?
Before, like, I didn't have a formal system to get out,
Uh-huh.
but now I'm gonna apply your system to get out, because
Yeah.
that was inconsistent.
Yeah, I mean, if you guys notice that, if you look here, so here is resistance right here. Can you guys can see that? So here is resistance right here, this resistance line, and this blue rectangle right here is when it gives the buy signal on this candle, right on that break of resistance. So it's pretty precise, it's pretty accurate. And then here was when it gave the sell signal. Yeah, Peter, if I mean, it's really hard to follow the signals exactly, but if you're able to, it will help quite a bit. This is where a lot of traders, including myself, will get you know, kind of messed up with the trade right here. You see this red candle right here? This red candle right here is what will get you sometime, because that's selling coming in, but it held support. Sellers are coming in, but it held, right? But if you have the stomach, I don't have the stomach for this. Because when I see red candles, that tells me, hey, the sellers are coming in. But in this case here, guess what? It held. It held. So yeah, if you can make it a practice to really just stick to the signals, you remove a lot of emotions, All right.
Today was like I had that mental shift because I'm very stubborn with Twilio. Like, I know the pattern, like I'm gonna stick in the bear trade, but today it gave a exit signal on the 30. So it's like, you know what, I'll just take the exit. I'll just jump back in and when it gives me another entry.
What's the symbol?
Twilio, TWLO. Because you know,
Are you long or short that one, Peter?
yeah, I'm shorting it because I know it's in the markdown phase. So I'm holding on to dear life. You know, I'm stubborn. I'll ride that thing all the way down. But it gave me a exit signal out of my short. So I just like, fine, I'll just take it. I'll just get out. I'll just follow the system. I'll take out my.
So you got out at where, 167?
Yeah. You know, I took a small loss because I want to ride that thing all the way down to 140. You know, I know this is just a pullback, but you know, I'll take, you know, it's still overall profit, but I had two positions I had to close out early because it told me to get out, told me a buy signal.
This is why, good job.
See, they gave us the sell and then the sell exits by the cover. So that's why I was like, you know, I really don't want to get out, but the system's telling me to get out, and I'll just get out. I'll just get back in at a better price. I'll just get back in. And when it does a huge pullback to the 50%, I'll just get back in again. Before then, I would just ride it out. I would just ride out the pullback.
You guys see that?
No.
You don't see that?
No, I'm a little confused.
It's pretty cool. It's pretty cool.
Green.
Okay.
Why is he shorting it?
So he was short. Where were you? Where was your short, Peter?
My short was way up in 200.
So at 200. So he shorted it on the 240.
Yeah, you can say daily 240. Yeah,
He shorted it. So
I'm swing trading.
Down here,
no.
and then, okay, so up there.
So he shorted it at 200, and then what he did was, right? This is good. This is basically what Kim did, but Kim did the reverse. Kim went long and bought, right? So Peter fine-tuned, right? Kind of zoomed in on a smaller time frame to look for an exit. Okay.
Because I'm just applying to what you're teaching and just to protect my capital and exit.
Very good.
Yeah, stick to a system, because in the past I'm a good trader, but I'm just inconsistent. I'm not following adhere to anything real strictly. So right now it's just that mental shift. Like, okay, I'm gonna be a little bit nimble. I'm not gonna be super stubborn. I know I'm right. I know it's gonna go to 140, but I'm gonna get out of my position. I'm gonna preserve capital. I'm gonna get in when it gives me another sell signal.
So what he did was protected his capital, right? Got out, and he'll wait, right? What Kim did was this. Kim took this. So this buy signal here on the Q, was it on the Qs, Kim?
Yeah, the Q's, Q.
Yeah. So he went long. Now, no, Peter could go long, right? If he wanted to, he could get calls, right? But he's gonna wait and then go back down.
So he's gonna go long on this one, right?
No, he just got out.
Yeah, I took profit
He
basically.
just took profits.
I had like 3 positions, one starting at 200, one at 170, one at short at 160. So my 170 and my 160 short, I lost a little bit of money, but I made good money on the 200 position. So I'm just gonna, I'm just gonna protect my money. I'll get out. It tells me to get out. And then I'll just look for a better entry when it gives me a sell.
And you're using the system, the signals to
Correct. I was looking at that. I was looking at Sniper, and I was looking at this too, and it tells me get out on the 30 to exit my short. And then it's like, I don't really want to, but I'm gonna shift. I'm gonna put this into practice.
Yeah, because what could happen here? So we've got a buy signal. If you guys look here, right? Although it's on the 30-minute time frame, it's a smaller time frame, right? We still follow the 4 phases, right? So guess what? This is the markdown phase. This is accumulation. If you look here, so this is really smart because he could really get in trouble by holding on to that trade. All right. So if you look here,
trader was talking about, don't let your profitable position turn into a
True, if you
losing
trade off
position.
240 and use a 30 to know when to get
So
out.
I was like, I'm already in profit. I want to protect my profit. I'm not
Yeah.
gonna risk the
I
pullback.
guess that's the part I'm just not understanding. How did you, by shrinking the time, and that's giving like a sell signal, like to go long.
A
was
sales
really-
signal to get
I was
out.
really kicking myself because I had a full-time job and I saw and when I saw that huge bearish move, it was like I should have like just took profit on all my bearish position because I had to go to work and then basically I closed the lucid position at a profit and all the other IWM bear position just got exposed to the pullback and it was like, oh, that was like thousands of dollars that I could have just put in my pocket. I left it on the table and I got ripped apart.
Okay. So this is something that this is advanced, right? So it is advanced, right? Whenever you guys have a situation, kind of like what happened, right? Where everything kind of flips around, you can start looking for exits. You don't have to wait on the 240 to get a sell signal. Okay, you can get a final, or you can fine tune your exits. That makes sense?
Yeah.
By going to a lower time frame. Okay, now it's advanced. Is what Kim is doing, is what Peter did. Okay.
Hey, David, I
So
want
you can use the smaller time frame to kind of manage your exits. That makes sense, Gary?
I mean, I get the concept, I just don't understand how by reading the smaller time frame, you know when to exit. That's the part I'm.
Yeah, right, like right here. So he was short, right? So on the 240, the 240 hasn't given a short signal yet
There is no signal
on 240 yet. But there's a sell signal
30.
on the 30. So he's using.
And is that what you do too when you're swing trading, when you're holding for days and weeks? Do you use a smaller time frame to tell
Yeah.
you to get out?
Yeah. Yeah. Especially if you've done well in that trade, like you've done really well, and especially when you come in near a big support area or a big resistance area, right? You can fine tune your exits with a smaller time frame. Now, we don't talk about that a lot on the general classes because that's going to throw off a lot of the new traders, right? But yes, you want to get to the point where once the trend, what happens is this, right? On the 240, you'll get big swings, right? You'll get big swings, but it might take it might take a lot of your profits. Now, this is, guys, I can't talk about this in all of the classes, right? This is
Today's we're advanced class.
Yes. So you can fine tune your exits, right? Once you've done really well, it's especially if the price collapse. So let's say if the price collapse like this here, kind of like this here, when the price collapse like this, you really get a big move to the downside, you know that the buyers will come in, right?
Yeah, and that's what happened,
Yeah, when you know the buyers will come in, then you can move to a smaller time frame, take
To
some
exit.
profits. You might not take all your shares or your lots off the table. You might close 80% of it and just leave a balance in there, okay? Or then you might go long. This is if you look here, you have a question, Gary?
Yeah. So basically you're saying that big drop, you already know that they're gonna come back up. So you go on a smaller time frame to play long, going back up?
Yeah, to exit, to close your positions, or to go long. And what you're doing is basically you're scalping.
Yeah.
or you see you see the big move, right? You got the big move, but you're just playing between the move. That's all this is. You're playing between the moves. You're protecting capital and you're trying to make some capital based on that volatility. Okay.
All right, I get that. So
Yeah,
So-
when I got better, I was just like, I thought about capital management more than whether I was right or wrong. Like I want my capital to be growing. So if I just let it play out, and I may be right, but my capital is just my profit is, being reduced. So I rather take the profit, and then when it gives me a better entry,
Yeah.
if I'll get back in going bearish. So that's kind of like the new mindset.
Was from a day or from a 240?
240. Peter, your initial entry was a 240, right?
Yeah, it was a 240. It was just when it broke support on the 240, I got in bearish. And then, last 2 days was a really strong pullback. So I thought, I'm very profitable on this trade. Let me take the profit off the table.
Understand that the 240 that is going to you're talking about a wider time frame. So you're going to give up some profits. Okay, you're going to give up some profits. Understand that. But so what he's doing is Peter said, hey, I don't want to give up all my profits. I want to capture some of my profits, but he's not randomly doing it. He's using the system.
Yeah, I get that.
Right, on a smaller time frame, all right, and using the signals.
I just never used the only time I've done options is when you give them to me on Friday.
Mhm.
So basically he's doing options on his own, but another completely different way. So my question then, all right, so he's starting at 240. I don't understand. How would you understand?
Well, this is you talking about sniper?
Yeah.
Yeah, that you can't do this with sniper. Yeah.
So what is he doing that with then?
Peter, what did you do that with what was that stock?
Stop loss?
No, it was
VWLO.
it was a earnings play.
Okay.
It was I just been following a lot of tech stocks. I just been picking stocks that's showing that it was going to break down hard. So, support resistance. It's still using the same system, just on a 240. Earnings, it did well, and then just broke down. So I knew that it's going to break down to 140 from 200. So, did puts, 3 put positions, added in, when my 200 put was doing well, I added in when it broke support, added in 170, added in 160 put, and then basically the 30 minutes told me to get out, and then I'll get out. I'll just protect my money.
Very good. And look here, if you guys see here, right? So this is the markdown phase right here, the markdown phase. And guess what? We've got accumulation here. Look at this, accumulation, price broke, resistance right here. Yeah, this price could go much higher. But guess what? He's out. Yeah, he's out. He's protecting his capital. And guess what? If he got out down here, if he got down in this area here, that's the low. The very low was what, Peter?
It touched 146, 148. So that's why it was so hard for me. Like, I want to be right. And I keep on asking myself, do you want to be profitable or do you want to be right? So that was the problem before. It's just that stubbornness. I know I'm right. I know it's going to hit 140, and I need to stop being stubborn and just be more profitable. Take money off the table when it tells me to get out. Stick to a system.
Very good. So being nimble, a lot of traders do not like trading on the 240 because they give up a lot, right? So what we can do, still trade the 240, but if we can do this, lower the time frame, All right. 30, 60, 30 works really well. All right. 60, sometimes it's too long. You still give up a lot of profits. The 15, you'll find a lot of noise on the 15. So 30 works well. So I'm glad you figured this out, Peter. All right. That's what Kim, you did that. You used the 30, right? The 30 is what you
Use the
used?
30, but on, if you pull up Palo Alto Networks, I used the 240 on that one. PANW was another earnings play. Paul, Apple, Nancy, William. I've been in that for 2 days. And I bought call options. And if you put it on the 240, see on the 30, it's on fire. But if you look at it on the 240, it's not bad.
All right, give me a minute here. Oh, this is Sniper. So what did you do here?
I bought 510 calls 3 days ago and I paid 50 cents for them. And I sold some for $11.50, some for $28.90, some for $49.90. And I sold the rest today for $59.75.
Where was your buy signal?
I need to know
But
what-
now earnings.
Oh, okay, earnings. Okay, you think it was gonna be strong? Okay.
Can I call him?
Kim, they want to call you. Gary wants to call you. Gary and Stella.
Yeah,
He's
you
good.
were
good.
really first. Like you're first. Like you're super early. Like you kind of could predict that bullish move before it actually happened.
Because when I bought mine, the stock wasn't even at 580. And I bought 510 calls. So I needed a $30 move to make money.
Let me ask a question, Dave.
A $30 move, but it was a $400 something stock though.
He said he was listening to.
Ask him. Hey, Kim, Gary has a question for you.
All right, go ahead.
Yeah, so how do you know which options to even start looking for to start using the strategy?
How do you know what? Say, I can't hear you.
Like how do you know what options you want to start looking for before you started using the strategy here? Like how do you know which companies to look for? And
Okay, what I look for, okay, is I look for, okay, who's reporting, what have they done in the past, and I take a look at the charts. Okay, when I look at the charts, I'm looking for, and I say to myself, what if we get a break of resistance and this thing really start moving? Okay, and what if the earnings are good? So in this particular case, the earnings was good, and we did get a break of resistance. And you see what David has, I'm trying to think which one. Hey, David, on the 240, can you put your signals up?
Yeah.
what is that? PAWN, PAWN. You're on Monster right now.
Yeah. What is it? P what? P
PANW.
NW.
Yeah, see the buy signal there, guys?
Ah, yeah, the break of resistance.
What system are you using? This is the Monster you use right now?
I'm just using the data because the data the other ones. Yeah. So your buy, see the buy, you see the Kim, just amazing trading.
I know it's like because this is a really ugly chart to look.
It's a horrible chart. It's
a range bound chart. It's like for
It's
you
a-
to take
it's
a long
horrible.
position on this one. It's amazing. It's like It's like I wouldn't even touch this chart on the
No.
pole.
The options, though, only pay 50 cents for them.
Yeah, it was like it's a strong play. It's like, I mean, not a strong play, but it was basically it's amazing trade. Yeah,
So did that buy
My
signal?
Chick-fil-A doesn't look like yours.
What?
When I look at this trade, I would be selling options. I mean, I'll sell out of the money options, but you went bullish on this one. You bought an out of money call. I mean, it paid off in your
And
favor.
it's not like this is my first time trading Palo Alto Networks. I probably have traded this stock for the last 15, 20 years.
See, you knew from
Oh.
history.
Yeah.
Perfect trading. I mean, nice buy signal. Look at this buy signal right here. This blue triangle right here on the break of this resistance. Good resistance. I mean, look at this. Perfect resistance here. Really good resistance. Broke it. And they jumped. This is a good example, guys, why we have to follow support and resistance. Look what happened to the price after it broke resistance.
Yeah, and David is making a very good point, guys, because a buddy of mine traded this too, but he got out long before I did. He got when this thing barely broke resistance, when it got above about, I can't see the number over here to your right, David, right where it broke resistance. If you put your scale up on the right-hand side.
537.
Yeah. See, soon as it broke, soon as he had 510s too, soon as it barely broke 537, what he did is took his trade off and didn't let it run.
So is that-
And didn't let it
am I
run.
still in this?
And that's when you should be holding it when it breaks resistance, not selling.
It's the opposite, right?
It's the opposite, yeah.
The opposite. Stella had a question for you, Kim.
All right, Stella, go ahead.
Are you still in this?
Am I still in it?
Uh-huh.
No, my options expired today, so I had to sell it for.
Okay.
Yeah.
All right.
This is what we call high risk, high reward. You're gonna trade. Expired today. Wow. You got the option cheap.
Yeah, that's the way I like it.
And you know why it was cheap, right? No one was watching it.
Nobody wanted to touch that. It
No
was
one
a tip
wanted
of
to
bull.
touch it.
As a seller of option, I would have took your lunch money. It's like, oh wow, you wanna give me free money? Okay, I'll take it.
Pretty cool.
But you guys will learn to pick these up too. And like I'm saying, I was telling you guys before, I have a huge advantage. I'm sitting here and I got two TVs, one with Bloomberg, one with CNBC with numbers constantly going across the screen. I got two laptops and I got 4 screens. So I can watch a lot of data and I'm sitting here all day. I don't have to go to work. This is my job. I don't have any children. My kids are all grown. I have 5 grandkids. They're in Michigan. So that's I have a huge advantage over you guys who have to go to work, who have to take care of a parent, who have to take care of children, who have to cut the grass. I don't have any grass. I live in a condo. So it's like,
I mean, I lost so much profits by having to go to work, and I can't get out of a trade. Like when when violent moves like yesterday, it was like, damn.
but the main thing though, guys, and I hope you guys get this out of the class, the fundamentals that David is teaching, when stocks are being marked down, when stocks are being marked up, when stocks break resistance, when stocks break support. If you keep those things in mind, you guys will do okay.
Yeah. Amazing trading, huh?
That's
Amazing trading.
amazing.
So I think the message here is to stop looking at the 30-minute, not as a trading window. Okay, still use your trading window as the 240, but start thinking about, and we used to teach this quite a bit, but what traders would do, I got away from it because what traders would do, they would keep it on the 30-minute and they would only trade on the 30-minute. That's not what we want to do. Okay, we want to trade on the 240, but then you can manage the entries, manage the exits. And what happens is this, right? You know, because you've done this so many times, you see where support levels are, you see where resistance levels are, right? You see the clusters, the buildup. You can start using the 30 minutes to take profits. All right, and manage the trades. That makes sense?
Sure does.
Yeah.
Yep.
So,
And if it's the same chart, if you put it on a daily, it really doesn't make a lot of sense either on a daily. It's been so choppy since here, hang on. This thing has been so choppy since December. Very, 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 very choppy. Even if you go back to a daily chart.
So Kim, you caught the only trade to be had.
Yeah. I didn't try to short this thing. Before this, I wasn't shorting it. I wasn't going long. Now, a few months ago, when you have your buy signal where it gapped up on earnings again, now I did trade that as well too, way back to your left.
Right here?
Yeah, right there. I did trade that day. Yeah, I did trade that. And I stayed in it for a while. That was a gap up on earnings.
Very good. Good job. Good job.
Yeah, amazing trading.
Good
Could
job.
we look at the next stock, Upstart?
What is the symbol?
UPST.
ST.
Peter, you're going about life the hard way, man. That's a hard thing to trade right now.
That's why I wanted to analyze it. Super strong earnings, it popped up, but it came back down, filled the gap, and now it's going up a little bit. So
So there's nothing to do right now with it. Are you out or are you still in?
I'm already out.
You're out? Okay.
Yeah, I hit my imaginary stop, so
Okay.
I took profit. So I'm just looking for a buy signal to go back in. It's a beautiful chart, super strong earnings. This stock is a beast if it goes into markup phase.
Yeah, it's getting ready. A buy signal would probably come around. This is on the daily now. Okay, so put it on the 240. So I would say about right in this area in here, you would get a buy signal if the price moves higher. So right around the 150 mark, 150, 152.
Since I'm trading on the 240, can I look at the hourly chart for a buy signal?
Yeah. Mhm.
Okay. Yeah, that's what I've been looking at.
Yeah. But try the 30 instead of the
30, okay,
instead of
yeah,
the hourly.
30.
Yeah.
Okay. All right. Yeah, because we're talking about the 30 minutes.
Yeah. Yeah.
I love this stock. This stock is amazing stock. Like it's very clean looking, no ambiguity.
No, keep in mind, just because it's been clean before doesn't mean it will be clean in the future.
Okay.
Yeah, so
Got it.
yeah. So I mean, yes, very nice right here, but that could change. All right. Okay, guys, I'm gonna call it a weekend. All right. Great job, great trading. All right. Start playing with the 30 minutes more. All right. Remember, don't use it as your trading window. It's just to kind of fine tune your entries, fine tune your exits a bit. Okay. What's nice about the 30 minutes if we get a buy signal on the 4 hour, you know, sometimes we'll get a pullback, right? So price will hit resistance. We get that pullback where they get traders out of the trade. You can use that 30 minutes to kind of time your entry. All right. So there are lots of nice tricks you can do with that. All right. Hey, Kim, thanks. Peter, thanks. Taj, hey, buddy. Taj, hey.
Can you hear me?
Yeah, I can hear you.
What's going on?
Hey guys, Taj has been with us for 10 years.
Ashley, what you at, Ashley, today?
10 years, 10 years.
Been that long?
Guys, have a good weekend.
2010?
Was it 2010? So 12 years. Taj has every single system. Yeah, 2010.
Amazing.
Yeah, 2010.
Crazy couple days, huh, Taj? I hope you made some money, man.
Nah, I'm watching. I haven't made any money yet. I've made a ton of money and I've lost a ton of money in the past. I'm coming with a new strategy this time.
Hey, you did some work with didn't you? You did some work with Ricky, didn't you, Taj?
A little bit.
Yeah, a little bit of work with Ricky. Yeah.
On that US 30, but that US 30 is a monster.
Yeah, that US 30 is something else.
You lose
Something
your
else.
house,
Trade was 30 on.
pants, your shorts, you lose everything playing with that.
Yeah. All right, guys. Thanks, Taj. Guys, take care. Have a good weekend. I'll see you guys on Sunday, okay? And we want
Bye,
to
everyone.
thank Stella for coming in all the way from Philly.
Hey, thanks for coming in, Stella.
Excited. I'll see you on Zoom next week.
Yeah. Take care, guys. Bye-bye.
All right.
Bye-bye now.